Good evening, everyone. Time for another silver update. This is a 1-hour chart of silver provided by netdania.com. You can click on the link below. We've got a number of lines here. We've got our primary downtrending line, which we violated and broke up above it back around the 24th or so of February. And I've drawn a flat trend channel that seems to be the new formation that we're in. Now, the $30 price target is going to be the target that we're looking for, but we seem to have kind of flattened out here. That's important because normally the corrections that we get in silver are very dramatic, and when they end, they pretty much end. So if we aren't rounding down at a more rapid slope on a regular basis, then generally that's the end of it. So I'm starting to wonder whether or not we're going to get a test of this low here. We may get another run up to this top and another test down. Can't say for sure, but we're definitely starting to enter into this sort of flatlining pattern. Now, the stocks are starting to sell off. If you remember, I have been following Apple Computer, and if we pull up their chart, you can see that Apple actually made another new high today. If we do an overlay of Apple with the Dow, they're starting to diverge. Now, that's not an unusual situation when you have a rolling over market. Let's pull up the Dow real quick here and look at that. So we have a kind of ominous pattern forming in the Dow. The rollovers that you get in the Dow, such as here and back in here, normally when we start to roll down, we go down dramatically. You can see the MACD is starting down towards that zero line from a fairly high point. So it's quite possible that we're going to get a significant downdraft in the market. The stock market, now that's going to be an effect on the precious metals, but we don't really know. The gold market has been stronger. On my blog, I posted a overlay of gold and silver, which have been diverging recently. In your normal deflationary scare scenario, gold tends to show more strength. That only makes sense that gold being strictly a default hedge or an inflation hedge, while silver being a industrial play, gold tends to strengthen first when you have that type of scare. So gold is starting to strengthen. Now, I don't buy into that argument. Of course, that's a manipulation argument in my opinion. I think that silver is actually a better hedge against deflation than gold is because, and we'll get into this when we look at the amount of silver it takes to move the market. But the general consensus is that when the economy slows, silver and gold go down. But if a deflation scare is on the horizon, gold will start to rally as its default play comes into play, and silver will continue down as the deflation story starts to become the case. Now, I don't agree with that because my opinion is that the bulk of the usage and buying of silver is going to be in Asia, and I've shown you before on the Silver Institute charts that even during the 2008 downdraft, which is, in my opinion, a much worse situation than one we're facing as far as their willingness to let things collapse. So I don't really think that risk is there, but that's the perception, so that's what you see. So let's go over to the question of the night, and that is on the blog from Silver Hopeful. And the question is, hey, Brother John, enjoy your videos and blog. Keep up the good work. Recently, I read Currency Wars, and I believe that's Jim Rickards, and was studying all I can about silver. Have come to a simple question: what if someone like Hugo Chavez wanted to crash our way of life? wouldn't all he have to do is just put down $8 to $10 billion of his oil money onto the CME for silver? It would be cheaper than building missiles, planes, and all the craziness of war, and it would absolutely crush the nation and the global economy. It feels weird to think this way, but isn't it just that simple? I read Harvey's daily report, and he notes that people are sitting there in the OI for silver. They can't be that dumb, can they? Are those people asking for their money to be taken, or is it someone or another motive and they don't care, they want chaos? As I understand, the CME isn't where Apple or SNY get the silver for my gadgets. They go to the miners directly. Thanks again, Silver Hopeful. So, a couple of important questions. Obviously, the question of the day and the year and the decade and the millennium is going to be, why is it that the big money isn't getting into physical silver? And I've addressed that many, many times. I've talked about how Warren Buffett was chased out of his silver position, and it's very suspicious how no one with any significant amount of money is getting into the silver game. So my guess is that Chavez probably doesn't want to tangle with the powers that be, and that's probably the reason why he doesn't do it. Is it going to happen? Yes. At some point, it's going to happen. There is going to be a player who is the next Hunt brothers, and this time is not going to be like the Hunt brothers, because when the Hunt brothers were acting, there was a good 10 billion ounces of U.S. strategic silver stockpiles that could have been dumped. So there was a credible threat to stop the Hunts, and of course the Hunts were foolish enough to get leveraged rather than just stack the physical. So that's coming in the future. We don't know who that's going to be. Someone is going to break ranks. That's the way it always works. But up until this point, no one has. Now, of course, I've covered before, you've got Hugo Salinas Price, who's very vocal about all of these things, and he is worth, I believe, nearly $50 billion. So I've covered before the math on that, and he could break the whole thing himself. So why that doesn't happen, I'll leave that for the tinfoil hats to figure out. And as far as the people like Chavez and our friend over in Iran, the Ahmadinejad and all the rest of these, I really don't know, and this is a tinfoil hat speculation, but I really don't know how anti-U.S. these people really are. I don't know who's a puppet and who isn't. So as far as planned opposition, it very well could be that some of these people are in a camp that you don't really think they're in. So we'll leave it at that, but it's very possible for anybody with a large amount of money to crack this silver market. It's just so tiny, that's a given. Now, the issue about Apple and Sony getting their silver for gadgets, that's absolutely true. I've covered before the statistic that I pulled from FOFOA, which is, I have no reason to doubt what he's saying is true, but if anybody can confirm or deny, I'd appreciate it. But the statistic he quoted was that 5%, only 5% of the world's deliverable used silver that is actually consumed by manufacturing and going into coinage, etc., only 5% of that is actually delivered on the COMEX. So 95% of the silver that goes into coins, that goes into manufacturing, that goes into all the other uses is actually delivered on the COMEX. So it is quite bizarre that a market that only consists of 5% actually is able to set the price for the entire world. That also is an anomaly. At some point, that's going to change. So let's jump over to the main story of the night. This is going to be from Gary North. And although I don't agree with Gary North about everything, especially religious ideas and things, he's an excellent economic commentator, and he does a wonderful job here with this article, When Government Safety Nets Break. So I want to read some of that and then comment on it. The West's governments are going to default, one way or another. Politicians cannot bring themselves to stop spending money that governments do not have. The deficits of the major Western governments are now so great as to be irreversible. The governments must now borrow money to be used to pay interest on money already borrowed. In the housing market, this is called a backward walking mortgage. It invariably spells default. The subprime mortgages were mostly of this type. The West's largest governments are therefore subprime borrowers. Politicians no longer speak about politically viable plans to call a halt to these deficits. They speak as though revenues will come from some unknown sources. They talk of reducing the debt to GDP ratios in the distant future. This is subprime mortgage thinking. It always leads to foreclosure and bankruptcy. But this fact did not stop lenders in 2002 to 2007. It does not stop them today. Lenders lend 90-day money to the U.S. Treasury for 0.08%. What could go wrong? Answer: plenty. The ethics of the welfare state. The welfare state is defended ethically as a system of safety nets. These safety nets are defended as ethically necessary for a good society, meaning ethically good. Intellectuals see business profits as legitimate mainly because profits provide a tax base for funding the welfare state. These safety nets require constant and ever-increasing funding. They are going to lose this funding. Why? Because of national government bankruptcies. There's no question that deficits will produce a series of fiscal crises. These crises will initially be covered up by central bank inflation, but the end result of that policy will either be hyperinflation, which is a form of concealed default, or stable money, which will be followed by open default. There will be a default. The political fallout of this default will change the nature of Western politics. The welfare state is going to self-destruct. It is highly unlikely that we'll see the complete destruction of the welfare state in any nation, but it will contract on a scale not seen since the fall of the Roman Empire. That is because we have not seen a welfare state as comprehensive as Rome's until modern times. The bigger they are, the harder they fall. I know of no studies of the effects of the fall of Rome on the masses of welfare recipients. It took centuries for the system to decline. We know that the central state in 400 AD could no longer support the welfare clients that it supported with bread and circuses in the days of Nero. Manneralism steadily replaced the central government in the Western Empire. But for centuries, welfare clients lived and died as clients. Then the welfare state died. It did not revive until the 20th century. The Great Default. What will make the Great Default different from Rome's will be the speed of its arrival and the magnitude of the contraction. Birth rates have fallen everywhere outside the United States. The number of aged retirees in every Western nation, including Japan, is increasing relentlessly. The number of children born is falling. The end is clear. So is the politics of kick the can. Unlike Rome, the West's intellectuals have defended the spread of the welfare state by means of a system of ethics. It rests on the variation of the Mosaic commandment against theft, "Thou shalt not steal," except by majority vote. So widespread has this revised commandment been that the electorates in every Western nation will not tolerate its rejection. Yet the economics of deficits points to the operational failure of the welfare system. The defenders of the welfare state will then have to explain this widespread collapse of the programs. How did such an ethically superior system fail? How did it lead millions of welfare clients to trust a self-destructive state? How did it mislead so many addicts to government handouts? How did it lead them into a ditch, devoid of skills to compete in the post-default world? Answer: because the welfare state was ethically corrupt before it was fiscally corrupt. It is based on theft by majority vote. We have seen what happens to the false messiahs of the Messianic state. Western Marxists had a solid, though small, market for their fat books until the Soviet Union went bankrupt in the late 1980s and shut down in December of 1991. Overnight, Marxism lost its academic defenders. They became as invisible as Baghdad Bob did on the day American troops marched in. The Marxist system had been seen by Western intellectuals as intellectually viable, one of several legitimate perspectives. Then, overnight, it was regarded as a total failure, and even worse for intellectuals, a fool's quest, a bad joke. Marxism was rejected in theory because of its visible loss of power. The ethics of Western Marxism, in contrast to Marx's rejection of ethics, had always been an illusion. Marxism had always been what Marx had said it was, a matter of power. Defenders who steadfastly had defended Marxism in theory, if not in actual practice, were no longer willing to do it in public. They did not want to be identified with historical losers of power. If Marxism had been ethically based, it would not have faded overnight just because its power base collapsed. The true believers would have stayed the course, but Marxism was never about ethics. It was about power. So is the welfare state. The defenders of the welfare state have come in the name of higher ethics. When the system goes belly up fiscally, these defenders will face the same sort of existential crisis that the Marxists faced in 1992. They ought to be able to see that the welfare state is a fraud, a delusion, and an ethical monstrosity, a charity with guns. They ought to be able to see that theft is theft, with or without majority votes, but they don't. So let us look at something more practical. Let us look at a sign. Do not feed the dolphins. It is illegal to feed dolphins in the United States. Federal law prohibits this. I do not recall anything in the Constitution authorizing federal laws against feeding dolphins, but I'll let that pass. The fact is, people ignore the law. They love to feed dolphins. In Tampa Bay, tourists are big lawbreakers in this regard. Why shouldn't people be allowed to feed dolphins? Because marine biologists say giving dolphins free food addicts them to handouts. People are turning dolphins into welfare bums. The federal government's fish police see the threat. Handouts destroy the ability of dolphins, who are very smart fish, mammals, to survive on their own. Mothers do not teach survival skills to their offspring. They teach them to live off welfare. Tourists are creating intergenerational welfare dependence. In a 2009 article in the Tampa Bay Times, we read from this biologist employed by the National Marine Fisheries Service, quote, "We are able to document lineage from grandmother to mother to calf, all following fishing boats and taking thrown back fish." Marine biologists, who themselves are being fed by the federal government, understand the threat to ecology posed by welfare economics. It is a bad idea, they say, to addict smart fish to handouts, but the logic of this position is not applied to human beings who are far more clever than dolphins. What is gospel at the National Marine Fishing Service is anathema at the Department of Health and Human Services. What the government's experts on fish see as a threat to the fish, the government's experts on human beings do not see as a threat to people. What is the threat? Creating permanent dependence. And he goes on to explain how you get generational welfare, lifetime dependence. Of course, the whole thing is morally repugnant. It's morally wrong. That's not to say anything about how the war machine state is also morally repugnant and morally wrong. So that's a consistent libertarian position, which obviously LewRockwell.com holds. So I'm not going to be baited into taking the other side. Both of those are wrong, and both of those need to be done away with, as Ron Paul has so clearly stated. So excellent article by Gary North, really lays it out and shows you how welfare is not only morally and ethically wrong, but it is very dangerous and very harmful, and ultimately will lead to, hopefully not, but will lead to, in this country, some type of catastrophic collapse and possibly riots and martial law. Hopefully that's not the case. Hopefully it can be changed before it's too late. So back to the silver charts. We are starting to flatline, and my guess is that's going to presage a rise that will come in the next few days. At least a test of this upper trend channel is going to be around 33. We're going to try to get there and probably come back down and test 30 or so. We're rolling between 31 and 33. At some point this is going to break, so you've got an opportunity to stack at the bottom and look for a rise at the top, and we'll talk to you next time.